Hey guys, Josh here, Crypto Y'all, and today is the day we do a market update. And what's happening in crypto, what's going to happen with Bitcoin's price, and what are the geopolitical and macroeconomic happenings that are going on that will affect positive or negative price action moving forward. So stay tuned. This is a video that I do every week. Love for you to like, subscribe, hit the bell icon for future updates, and also stick around to the end. I've got a special invitation just for you, for those of you who are crypto curious and want to learn how to create daily income and harvest yields in less than 30 minutes a week of work every single day. Of this recording, there's a lot of macro narrative stuff that I've been talking about for the last couple of weeks. This is the most important week of the year so far for any market, that whether it's crypto, stocks, they're all correlated currently. And that's a whole other discussion if you guys ever want to talk about correlation, because ultimately crypto is meant to not be correlated with traditional financial markets, but they are currently, just because of low adoption comparatively speaking. At some point we'll hit mass adoption and it'll have a life of its own. That'll be the day when we don't want to trade a Bitcoin for $1. That'll be the kind of like the swap, the Indiana Jones golden, sandbag for the golden statue swap. But until then, we have market movements that are affected by macro narratives and macroeconomic situations. And so I try to keep this chart moving. All these arrows represent previous commentary and market updates that I've given. This is obviously a chronological view from left to right of where we are in the price currently. Bitcoin's at 21, we'll call it 21.4. 21.5 region. And what we're basically waiting on right now, stocks are up, waiting on the Fed announcement. We're waiting today to get the predetermined and what I believe to be baked into the price 0.75% basis increase of the rates. Outside chance, maybe 20% chance they go up a full basis point, which would be painful probably in the short term. And if we only go up 75 basis points, it's going to be, I don't know what's going to happen. Obviously it'll be really interesting to see what Bitcoin does in response to that. I kind of think it'll pump. If I were a betting man and we were drinking a whiskey together, I would probably say, hey, I'll bet you $5 that if it only goes up 0.75%, Bitcoin will go up. Now, the only other factor here is the GDP / recession or not report, because we've kind of survived earnings so far. We still have Apple and Microsoft to go, and I think a couple of the other FANG stocks. Google came out. They didn't have quite the profit that they wanted, but they had rosy guidance, it said in the headlines. So it's not like the bottom fell out from corporate earnings, but there were definitely, Walmart gave a big red flag from a consumer perspective. They're being one of the largest retailers outside of Amazon. That was a big signal. So the GDP report is supposed to come out, I think, either tomorrow or Friday. And that's the wild card, because some people are like, yeah, if it comes out and we're in a recession, the market's going to tank. And it might for a short amount of time, just because of, I don't know, emotional, sentimental sell-off, whatever markets tend to do. But then there's the other school of thought that's like, yeah, we're in a recession, and that means that you don't fight the Fed. And the Fed, if they see a recession, are going to be, more prone to stop raising interest rates, at least for a season, to give some relief to the markets and add liquidity. And that would make the markets pump significantly. So from a price standpoint, like if you're just looking at this going, okay, all this macro narrative stuff is crazy to try to keep up with. What I'm saying is we have been, and we kind of still are walking on the razor's edge right now. And if you continue to look at Bitcoin's price here and watch it, it's been finding really incredible support at this 20,000-ish level. You know, we wicked down to 15K back a few weeks ago. A lot of people that I follow think that was the bottom. There's a lot of bears out there crying the sky is going to fall again. And it totally could. As a matter of fact, if you see Bitcoin over the next few days with some of these macro announcements, if you see Bitcoin fall down and it kind of breaks below that 17K number, it's probably going to go back and find a lower low. But what we've found in the 15K number a few weeks back was what we call a local low at least. And so now the question is, are we going to find another local, or are we going to find the bottom of the market? Depends on who you are and what your positions are. You might be rooting for that so you can get more discounted purchasing. You might not want that because you've been in a bear market for seven months or almost 9 months, I guess. And so those are just things to look out for. If you see what Bitcoin's been doing is that it's been putting in higher highs. And so over the next few days or week, if it's just coiling up, like it's just edging up, going down, and just doing this thing right here and just like coiling up, it probably means, and that obviously is not to scale. It's probably more like little wiggles, you know, and just trying to find a way. Then what it's trying to do is basically break out. And then I think we're looking at a minimum target of around 26,000 in the short term if we see a break to the upside or an impulsive break to the upside. Then you've got the Ethereum merge that is scheduled for September 19th. So what I'm looking for, and I'm going to take this off of screen share for a second just to talk more about this, but what I'm looking for is on a narrative basis, is the confluence again of the macro stuff. If the Fed raises 0.75%, and if inflation has tapered off there or is flatlined, if GDP report is good or bad, it kind of doesn't matter. I mean, it does matter. It's a huge report. But if for whatever reason the Fed in August doesn't raise rates or only goes up 0.5% or 0.25% or backs off the gas pedal at all on their quantitative tightening, then that in confluence with the Ethereum merge in September could get the market and the Bitcoin's price north of 35, north of 40K, and Ethereum would really probably steal the show from that point on. It's a really good chance that Ethereum's price coupled with Bitcoin, there's this measurement called Bitcoin/Ethereum dominance out there. And so a lot of people think that Ethereum's volume dominance is going to over or eclipse Bitcoin's in the near future because of the merge. If you haven't studied up on the Ethereum merge, it's just them moving from proof of work to proof of stake. And that is going to drastically reduce the circulating supply of Ethereum. I think it's something like the amount of time that it would take right now to mine Ethereum. Like if you're an Ethereum miner, the equivalent to like 1 year of Ethereum mining now would be like 100. It'll take 147 years to get that much at the same mining capacity or hash rates after the merge, which means there's far less supply to get their hands on and more work for the miners to make it lucrative. And those who hold Ethereum will get the price action. So if you're trying to look for like a large cap crypto bet right now that could, I don't know, I literally don't know, and I hate to even speculate price action. There's a lot of people calling for $10,000 plus Ethereum. If you're looking for something that's a better price action investment, you're not thinking about sentimental, philosophical, you're only thinking red-blooded capitalist. If you're looking for something better than Bitcoin, not as risky as Sphere Finance or a micro cap, Ethereum is a great place to probably be positioning. I am positioning there. Great place to be dollar cost averaging right now. I'm not saying to ape into it. I'm not saying to put your life savings on it. But if you're just looking for a place or a vehicle to just literally in the short term to see if you can take advantage of some price action, Ethereum's a great place just because this is something they've been working on for like 7 years. It's been a sock. And honestly, if it happens on September 19th, I'll be shocked because they said it was going to happen in July. Then they said it was going to happen in August. September 19th is the most specificity that they've given us to date on that merger. So the lead developer made that comment about 2 weeks ago. And if you look back 3 weeks ago, and if you look back, Ethereum had gone up by 80% since that announcement. So it's a lot of Ethereum maximalists out there are having a pep rally, and it's almost game day. So macro market update, that's how I'm kind of looking and trying to balance the data. One other thing that we always have to look at is the DXY, the 10-year treasury, the dollar yield. And it's interesting because, recently we had the what I would call a pseudo pump with Bitcoin and the market for the most part, but and Ethereum going back to July 14th. This is where it seems like, and we keep thinking we're topping out on the DXY, but it always seems to rebound. It is basically an inverse relationship with Bitcoin. So you can see it's come back up for a few days here. And you can also look at Bitcoin it's kind of stumbles around in light of that. And so does Ethereum and the rest of the market. So keep your eye on the DXY chart. It's almost clockwork that they work inversely from each other. And if you go all the way back to November, look, it was at $93 in October. And it has just in an excruciatingly, bitter pill, month after month, it had the strength of the dollar versus a basket of major fiat currencies globally has strengthened. The only thing this is good for retail investors like us is when we travel abroad and we use US dollars. That's the only really good reason or way this helps us, because we're able to buy goods on the go in other countries at a much, much less expensive or much higher buying power. But this is not good for the global economy. We do not want a high DXY. All of the other countries have to pay their debt and commodities close in the US dollar. So all these commodities, energy, wheat, all these big things you see in the headlines, they are denominated in dollars, oil, etc. Well, countries have to take out debt and pay with US debt and dollars and all that stuff. We are a debt currency. That's what we are. The US dollar is, because of the Bretton Woods Accords after World War II. Go back and read the book, or at least the introduction of Accidental Superpower. by Peter Zeihan. He is a geopolitical economist, and he talks about the Bretton Woods Accords. But it all goes back to that. And we're now suffering, actually. The U.S. benefited because it's been basically an 82-year hegemony or dynasty or empire, whatever you want to call it. But now we're kind of in a pickle because you see the other countries, the BRICS nations, China, Russia, Brazil, and South Africa, and a couple of other of the emerging or developing economies. The United States' GDP represents about 25% of the world global GDP. It's by far and away the single largest GDP. However, if you combine the BRICS nations together, they are more like, I think, 28, 29, 30% of the GDP. So what ends up happening is if they get together and say, hey, we're not playing the US dollar game anymore, we're going to start denominating commodities in gold or whatever, then things are going to start changing, and we're going to have multiple currencies fighting each other globally, and money doesn't like to be pluralistic. So we're going to be moving. I mean, guys, we're here. This isn't like, George Orwell stuff. Like in the next decade or two, we will have, if not sooner, a different world reserve currency than the US dollar. I want to get off my soapbox. This is just kind of the stuff we want to pay attention to in the next 12 months, 12 to 18 months. We're marching into the Bitcoin halvening of 2024, which happens every 4 years, where the Bitcoin supply is halved algorithmically via smart contract because of the blockchain software programming. And it's just how it happens. And every time the bull market is ushered in, about 60% of it happens moving into a halvening. So then the other 40% usually happens after that. And it's what happened last cycle. It's what will happen this next cycle. A lot of people are arguing that these cycles are shortening. It's hard to know. It's a retrospective thing to look back on. So, all right, that's the market update portion of today's meeting. Now
Okay, so I hope that market update was informative and helpful for you. And if you want to learn more about what I'm doing, what I do is I take about 10 people through a cohort every so often. Me personally, it's a qualification application process, but it's a 10-person cohort where we go through 4 primary core training sessions. We have a community. You have unlimited access to me as the crypto coach and enthusiast, and we learn how to invest. Not just play the crypto slot machine and gamble, but actually learn how to use what I call the crypto flywheel investment strategy that includes cash flow, appreciation, and leverage. And we use those things in concert with each other to expand our net worth predictably, but also just create cash flow for lifestyle expenses and to have house money to invest into things that we truly believe are the future. So if you want to learn more about joining my cohort and kind of going through a quick, fast shortcut or fast forward way of learning that's high touch and very human, I started Crypto Y'all because there's just a lot of internet scam and smarm stuff out there that I want this to be a place kind of like, I'm from the South, Southern hospitality, like let's discuss things like friends do, right? So Crypto Y'all, let's be a community together. And so my cohort is for people looking for that feel. You want a human approach, high touch, consultative way of learning how to create passive income with crypto. I'm your guy. If you're interested in applying for my cohort, simply go to cryptoyall.co/call and book a call and fill out the little survey after you book the call. It's just a short, simple survey. It takes about a minute to do. It'll just help me before we actually have the call to kind of know where you are and what context you're coming from. And then we'll jump on a call. And if it's a good fit, I'll invite you to enroll. And if not, I'll point you in a better direction, I promise. Okay? cryptoyall.co/call. And I'll talk to you soon.